The idea is, if you're new, and I've seen so many times, like I fell victim to this too. When I first started really wanting to make big money, I was like, I'm undercapitalized. Like I don't have enough. And I took bigger risks than I should have, thinking I'm going to shorten the span of time that required to get to a bigger account. Because if I get a bigger account, I can make big money consistently. And it doesn't work that way. The worst thing that can happen is if you trade with a small account and you risk really big and you win, you're like, oh, I'm going to do that again. And if you get lucky there, what are you going to do the next time? Even bigger. Well, that's when the inevitable happens. You have that losing trade that becomes a losing series of trades, because now you're regretful that you did what you did. You knew damn well you shouldn't have done that. So you're going to try to hurt it. Just let me get back to what I had. I made $10,000 in the last 3 trades combined, and I just took drawdown and down, only up $7,100. I shouldn't have done that. Let me try to just get it back to 10,000. How many times have you been in that situation? Maybe not 10,000, but you've been there, right? You've had an equity high. You knew damn well you should have stopped. You got through there. You took a trip through hell, and you got out before the devil knew you were there. And you just decided to go back in there one more fucking time. And it burned your ass. And now you can't stomach the idea that you did it. You just want to fix it. What happens if you did that one more time and you fix it? It's going to reassure what you did was the right thing, and it's the wrong thing. You need to say, okay, my impulsive nature, my weaknesses, my frailty as a human being is saying I should go back in and fix that. Your trader and the analyst need to have a conversation internally and say, okay, what's the probabilities of me getting back to that equity high? What's the probabilities of me losing more? What benefit is there for me to risk more when I'm still up like I am? So the analyst talks common sense into the trader. And the trader, if it's not being a gambler, because there's 3 people in every one of us in trading: the analyst, the trader, and the gambler. The gambler is going to be the person that's going to look at somebody else's results and say, I can do better than that. Over leverage in a simulator account without a stop loss, just to say they can do something. Impulsive. Look at this, look at that. But hide the trade, so that way you don't see it, because if it fails, you don't get to know it. He did it, or she did it. You need to be responsible with yourself and know that I'm feeling impulsive. I'm feeling reckless. And I'm allowing my character flaws and personality disorders to impact my decisions about making money or preserving capital. And preserving capital is the number 1 rule in this business. Because if you don't have capital, you can't do shit. No money makes no money. It's going to be the same as a demo. You can push a button and see a result, but you can't pay your groceries with that. It's going to have to come from real money. So trading with 30% of your equity ensures that you're never over leveraging. And if you can't make money with 30,000, now I'm going to say this, okay? I was going to do it in the live discussions with Corps because we're planning something in January. I'm going to say this now, so that way it's out of my system, and I don't think it's venomous, okay? But he made a remark the other day. I was in his live stream. He was talking about somebody saying a $50,000 account or whatever. He doesn't believe anyone can make money with that. I disagree, and I may have misheard what he was referring to. But for anyone that thinks that they have to have 100,000 or more for leveraging to make money, to me that is unfortunate, because you can make money with 10,000. Okay, you can make money with 15,000. You can make money with 25,000. You don't need 50,000. You don't need that. And I want you to listen to how I'm going to close this session. We're not there yet, but I'm going to try to give you an idea of going forward into 2023 to keep it sober for you. But when you're only losing a very small fractional part of your total equity, of the 30% of your total equity. So if you're looking at your account, it's 100,000 leverage that you can use in your funded account. Trade like you have a $30,000 account, and stop worrying about measuring up. Okay, I guarantee you, all of you simply want to be able to go onto social media, and you're fucking smiling right now because you know you want to be able to say, look what I just took out of my funded account. You want that big fat 70,000 like the other young man did a couple months ago. It was in my fold. Got up on a leaderboard in FTML. All of you want to do that or better now. Don't do that. That's not what you should be doing. You're not out here trying to compete with other people. You're trying to make fucking money. That's it. Everybody blows their account because they're trying to do bigger than they're supposed to be, trying to reach beyond their means, do Olympic feats. Fuck that. There's a lot of you that are really sober-minded about it. And you're like, there's no way I would even do a Robbins Cup. I would never do a trading competition, because you know that your personal frailties would creep in, and the competition aspect would cloud your mind and your decision making, and you'd blow up. You'd try to overperform, take bigger risks than you're supposed to, and you crash and burn. And that's exactly what happens. That's why I love watching it every year. Every single year, I screen capture every single day. Every single day. And I study who's coming up, who's coming down. And I think it's an amazing site. You should do it too. You can see how they're hugely over leveraging their positions. And when they make money, they're really coming up a lot. There was a guy, Kevin Stufflebeam, last year. He went up to like 1,300%, like in real stunning, quick fashion, like crazy speed, like it was good. But I also knew that he was crazily over leveraged. And I said, if this guy was smart, he would just sit still, because he's the highest next to Larry Williams. He was the second highest person in the futures division, Kevin Stufflebeam. He ended up winning with like 300 and some percent, but he came down 1,000%. So I know he was drunk. Like, I'm going to keep pushing. Dude, you had it. Like, it was unlocked. And that's all anyone. So what anybody needs to do is to simply get to that number 2 spot in the ranks and just sit there, and everybody will break themselves trying to get there. And that's what happens every single year. The whole leaderboard rotates in and out, in and out, in and out, because they're all trying to push hard, really hard, overly reaching for things that are not necessary, because 90% of the traders in there are going to do that same thing. So if the students are listening to me that are going to go in there next year, let me hold it to the end. Okay, I want to close on a good note. Not that any of this shit ain't good, because it's all good stuff. Sugar high. So if you are only trading with 30% of your equity, you're removing the likelihood of blowing your account, because you're only trading with 30% of your money. And then you're doing what? You're doing your percentage risk per trade based on 30,000, not 100,000. Oh, this is bullshit. You can't make money with that. Bullshit. You can make money with any money. Stop thinking little money, can't make money. You just got to submit to time more. And there's nothing wrong with that. You want to be patient. Think about what you're feeling, that sense of impatience right now. You're all impatient. I understand. I was impatient too. But you all are expecting unrealistic results in such an unrealistic time span. Like, you honestly believe that you're going to make $100,000 in 2 months of live trading with a funded account without any level of stress? The only way you're going to do that is over leveraging and taking nuts levels of leverage and risk. Why? Your whole business model should be, I want to be consistent, know that my trades will work more times than they fail. I will not be affected adversely, mentally or psychologically. When I take a losing trade, it means absolutely nothing. It's a tax. That's it. And when you adopt that mindset, you will not doubt the market condition that you're trading in, because if you're not fearful of losing money, or if you do take a loss, it's going to be so infantile, so insignificant, that it won't matter if you do take a loss. That means you're going to trade better. You'll be able to go in, trade, just like you probably feel when you're trading on a demo account, like one of the students I have. Phenomenal trader when it's demo. Like precision, crazy, nice, really good. Put him in a live account, short circuits. Because he's not from a country that has a lot of money. And money being taken from him, it's astronomical pressure. It's risk that he can't absorb it. He can't do it. And that's a byproduct of not doing this for a length of time where you condition yourself to being bored with the results. When you make it so consistent, you're doing it in a position where you're not making real money or taking real losses, but you're bored with the process that you keep doing it over and over again, and it's consistent. Then when you creep into a small little account, the smallest account that you can start with, and you just dabble with it like that, and you build in a level of comfort of growing in equity, and you add a little bit more. After 3 months, put a little bit more money in. You ease into it. Not, I'm going to get funded and try to get $8,000 in funding and just go crazy. Do over leverage everything. And if I lose half the accounts, who gives a shit? Because I got 4 million leverage still. That's not doing it efficiently. That's dumb. You need to be consistent about what you're doing. And if you do these things, you will not be fearing losing. You can't blow your account because you're under leveraged on all your trades. You're under leveraged. See, you're all looking for 500 to 1 brokers. Hey, ICT, what broker do you have that would be a good broker for me? I'm in this country. I don't want to use this one since 500 to 1. 500 to 1? That's fucking stupid. Like, that's fucking dumb. That's nuts. That is literally worse than casino odds. Like, that's guaranteed you're losing your ass. That's the really real shit there, okay? Don't even think that you got to do that. If you can't make money with 10 to 1 odds or leverage, you can't trade. In Robbins, you're forced to use the margins that the industry's forced on all traders. I understand, okay? I understand that there are discount brokers, and my son has used it with AMP. They allow you to trade with $300 per contract on the S&P. And I think like $500 for the NASDAQ futures. I might have it wrong or whatever, but the leverage that or margin requirements that's there is extremely low. Not surprisingly, that's the same margins that Larry Williams was using in 1987. Put your thinking caps on. But in Robbins, see, that's an area where traders go to measure up. That's why I always insist on Robbins, because gambling, over leveraging, and YOLO trading, I don't give a fuck what you make doing that. That's not skill. That is not fucking skill. That's gambling. And if I go into a casino and sit down at a poker table, I would get my ass beat by everyone else sitting at the table. Because I'm not a gambler. They know when to over leverage their stock and just go in there and just do that. And they're willing to accept losing that. I am not willing to accept losing YOLO trading. If you're going to compete, you're going to go in a setting where everybody is on the same playing field and we all have to use the industry standards. And you're going to have to fucking trade really well. You can't save your ass with doing 20 contracts to get me out of a fucking drawdown. That won't happen in Robbins. Put your money on that one. But when you got some mean motor scooter that's 50 years old that can take one contract and have 100% return in 5 weeks, when the competition took over a year to get 100% in forex, and that's their track record, that's the one they tout. Shit don't add up, does it? When the whole broker statements are opened up, logged in, TD Ameritrade, boom, 100%. And I was teaching traders the very things on this bullet point list of things I have here. I have about a half page still, in case you're wondering. You need refresher drinks and such. The idea of all my students in my mentorship group, I have different user groups and such, and some of them were like, hey, can you show us with a live account, massive drawdown and come back? And can you show us if you take losing trades in the beginning of the day, how you can fix it in the afternoon? And can you just show us how money management alone can fix poor trading? Because I believe that's the case. And I'm going to go so far as to say, as much respect as I have for Larry Williams, because he's really my first real mentor. There's a lot of shit about him on the internet. People still talk about him. People that talk about me still talk about Larry Williams in the same regard. And he got himself into some trouble. FBI picked him up, I think in Australia, they supposedly doing it for like tax evasion or whatever. I might have that wrong or something like that. But and people question what he did in the Robbins Cup and whatever. Look, Here's the bottom line. His account statements are online. You can Google them. You'll see every single one of them. Nobody has ever got close to his shit. Ever. Not one time. I'm getting ready to go into the end of this conversation already because I'm just chomping at the bit to do it. But when Larry Williams said that he's not a good trader, I believe that. When he won in 1987, what was his recipe for success? Holding to the close. So when he was right, if he was buying, he's buying, after the open is done its run lower, and then he's buying strength. That's his strategies. Okay. I didn't like doing it. I tried doing it. I lost my ass all the time doing it because I couldn't suffer through the retracements that always took place. He would have these extremely wide ass stops and just, that's YOLO. And he did the maximum leverage using Kelly principle and Kelly criterion, and everything that he could potentially put on, he was putting it on his trades. And the only saving grace was when he was right, buying early or selling early in the day and holding the S&P or the bond market for the whole daily range. Think about what you would have done if you would have done something like on a CPI day, or maybe not necessarily what he would have done or what you would have done on yesterday's non-farm payroll, but imagine 60 handles. But we didn't have moves back then like that. That wasn't the flavor of the volatility then. We had very, very small volatility. And if we got like 5 handles, 8 handles a day, that was considered a respectable range of S&P movement. That's a stop loss. I mean, it's insane how much volatility is in the marketplace. You young guys, okay, when I say that, those that are like 30 years old and younger, or maybe even 35 and younger, you have no idea what it's like when we were coming up. Like me, and Larry Williams, he's been doing longer than me, 50 years plus. Okay. So he admits from his own lips that he's not a good trader, but he's a good money manager. And that's how he won 1987 Robins Cup. He pushed it and he allowed the effects of money management to do its thing. So apart from the 6 or 7 things I taught individual students, and I told them they would see the results of it on specific days when I shared my statements, that's on my YouTube channel. Okay. Everybody's saying, can you show us losing trades? It's fraught with losing trades. There's lots of losing trades. That was the whole premise of why I was trying to teach my students. Don't be fearful of it. Don't be fearful of that. And they have to do it with one contract. One contract, 100% in 5 weeks, with lots of losing trades. Lots of them. When I wasn't teaching specific lessons to students' requests with live account, because much like all of you out here in the public, they never saw me. No one's ever seen a live account by me, ever. I've never made it public, ever. I've never done that until this year. I shared something with you and I teased and I baited a goofball down in Texas because I want him to look at that. And he made a big to-do about it. Oh, look at this precision. Yeah, challenge that. Come into the Robins Cup for real. Log into your account, prove that you got an email from Chelsea almost a month ago that you really are registered, sign in, show your account number. I will do the same thing. I'll match you on balance and I will beat your fucking ass at Robins Cup. I will immortalize you as a fucking loser. But that won't happen because he's scared. But I proved with that TD Ameritrade account, just with money management alone, just the money management principles alone, just like Larry Williams illustrated for a whole year of it, do 100% over 5-week intervals. If you keep doing 100% every 5 weeks, what do you get? Yeah, a world record. And it doesn't matter what balance you start with because it's all percentage, right?